Hello and welcome to the program. That was the closing gong ceremony held on Thursday in commemoration of the listing of Access Bank Holdings on the exchange. We all saw the CEO of the exchange right there with other Access Bank Group members, and the chief executive of Access Bank had a few things to say, thanking the NGX for listing them on the exchange and the support they've gotten over the years. Do take a listen.
Governance is extremely key to us. We've at different points in time over the past 20 years in our 5-year corporate strategic plans come out to this exchange to share with the market where we're headed. Even though it's not a day for speech making, let me just say that there is nothing we have promised this market that we have not achieved. There is no number we have promised that we've not gotten. Sometimes people say, what is happening to your share price? And I tell them, look, the market will find its level and it will solve all of these things in good time. But each time and every commitment we've made in each of the 5-year corporate strategic plans, like I mentioned, and this one where it ends in 2022, we have always met each and every one of them. As we move into the next 5 years, we will come and share with you at a later date our plans, but we have transited from being the narrow banking structure that we had before into one that has now a payment structure, that has an insurance platform, that will look at pensions, all right, and also digital banking, etc.
That was Mr. Herbert Wigwe, Group Chief Executive Officer of Access Holdings. We also have the Chief Executive Officer, the Nigerian Exchange Limited, Mr. Temi Kpokwola, speaking about what the exchange is doing to actually attract more listings to the exchange. Do take a listen.
Taking an inward look first and foremost to ask ourselves, are many of the rules and the requirements to listing, are there ways that we can soften those and relax those to make sure that we can get a few more corporates in? Of course, without jeopardizing the levels of governance and the quality of the companies that we admit. Of course, on top of that, one of the things that we're doing is a lot more advocacy efforts. Corporates list because they find benefits to listing, and one of the ways that you can get those benefits is working with government, advocating more on behalf of corporates that are listed. I think the third thing that we're doing also is what I call collaboration and partnerships. So we're working a lot more with our intermediaries, with our financial advisors to make sure that we can create the environment that they will then leverage on to advise corporates to bring them to the exchange.
I was the Chief Executive Officer, Nigerian Exchange Limited, Mr. Temi Kpokwola. They're talking about what the exchange is doing to attract more listings. Well, it's all about the financial institutions now turning, restructuring into holdcos at this point. And we have joining us on the show, Professor Uche Waleke, to help us understand all that's happening, with all these financial institutions and in the market. Great to have you on the program, Professor. Good evening.
Thank you very much, Ladi. Very good evening to you. It's indeed my pleasure.
Great to have you. Well, so, Access Bank is the latest financial services institution to restructure into a holding company. How do you see this trend, impacting the profit, of these banks?
Well, to get a sense, you also need to look at those that have been there before Access Bank chose to go the route of the holding structure. You will recall that before now we've had GT, we've also had First Bank. So we have First Bank of Nigeria holding, and we also have GTCO. So these are already banks that transformed to holding structure companies, and including, of course, the exchange itself. Following demutualization, the exchange also, of course, transformed into a group structure with subsidiaries. Of course, that has a number of benefits. You listen to the CEO of the Access Holding, talking about the, some of the benefits, moving from a narrow banking business, to paying more attention to the other related businesses, in a holding structure. So it's not just the narrow banking. They're also into payment system, digital banking, and all of that. So the nature of banking now has necessitated the need for the holding structure group. Recall too that before now we've been transiting, we had been experimenting with all manner of structures. At one point too, you can also see the then universal banking that we had, close to what we're experiencing now. Under universal banking, you recall, banks then were permitted to do, some other businesses. But given the abuse to which that was exposed to, the central bank had reason to reverse that. But what we have now is simply a form of business arrangement that encourages related business transactions coming under one roof. So how is it going to impact? I'm sure it's going to impact positively. If you look at the share price of First Bank FM, holding, before and after, you would notice that improvements have been recorded. Ditto for JITCO. Although in the case of JITCO, you might say, yes, the JITCO share price may be relatively low now at 24 naira, but the potentials are there that the price will appreciate. So I also see appreciation in the price of Access Bank from the current 9 naira per share or thereabout in the coming days as a result of this holding structure that it has adopted.
Okay, but how do you see, the market, traders actually reacting to these restructuring?
Yes, that's the point I made. That I think it's going to be favorable. It's going to be positive because it's a sign of expansion. It's a sign of growth. That you are treading that path. So that is the way I think the investing community will receive the news, and that is also what is going to propel the share price of Access Holding in the coming days and weeks.
And do you see, like the financial services, stocks actually continuing to do well, this year, considering that most of them are actually restructuring?
Yes, by extension, yes. Now we've had FBN Holding, we've had JITCO, we are having Access Holding, and I wouldn't be surprised if the other, the other Fogas banks, the other banks that make up the Fogas group, talking about Zenith Bank, for example, also adopting that structure. So I think overall it's going to be in the interest of the financial services sector. We'll see both in terms of appreciation and in terms of contribution to the entire equities market.
All right, Professor. Well, let's drill down now, on the markets. We've seen that, April has been quite a favorable month, for the market. We've seen, most of these stocks actually do very well, and the market has been in the green almost throughout of April. But do you see, we've seen other markets, global markets actually bearish, at this point. But now we're seeing the NGX, the Nigerian Exchange Equities Market, doing very well in April. How do you see this mix-up there?
Well, it shouldn't be surprised that we are having, getting this result. Globally, markets are tanking. They are tanking, primarily on the back of the, Russian-Ukraine conflict. Quite recently, I know that in US, for example, some tech stocks are also going down. Take Twitter, for example, following the acquisition of Twitter by Elon Musk. What happened? Twitter went down, and including Elon Musk's company Tesla. Over fears that the well, issues are issues to do with the reputation of the acquirer, himself. We've also seen drops in Amazon, but generally speaking, globally stocks are trending down. On the back of the negative impact of the Russian-Ukraine crisis, and of course in the U.S. in particular, we've seen inflation rates, going up. We've also seen the likelihood or the signal by the Federal Reserve that interest rates, would be up on, interest rate normalization. So all these are impacting on stocks. Now, back home, what has helped our own situation is, of course, the favorable earnings by many listed companies. As of Friday, I think the market closed on a very strong note, 1.64 NSE, NGX Osha Index appreciation. Week on week, we had, I think, 2.42. And for 3 straight weeks for the month of April, as you observed, the market only fell on the 19th of April when it fell marginally by 0.003%. So all that has happened in April has been on the back of favorable corporate results by many listed companies. And for the first time in many months, we are witnessing a situation in which the year-to-date return is now in excess of the inflation rate. Year-to-date return, as of Friday, grew to 15.99%. And of course, inflation rate by the National Bureau of Statistics for March was 15.92. So for the first time, we're having a real positive rate of return on the equities segment. And I think the trend is likely to continue as long as the investors keep expecting that many more companies will come up strong in their corporate results.
All right. Well, Prof, looking at April now, what stocks actually, stood out for you?
Of course, the oil and gas sector has done very well. I think the greatest performance has been from that end, notably Seplat Energy. Seplat, trading at an all-time high of 1,200 naira as of Friday. So the oil and gas stocks, Seplat, Total, they've all done well. Again, that's not surprising. Crude oil price is still very strong, and that's impacting favorably on that sector. The industrial stocks, yes, Dangote Cement at 292 naira has also shown an improvement. So we saw Seplat's the bellwether, if you like, the bellwether stocks, driving performance for the month of April. I've mentioned Seplat. I've also mentioned Dangote Cement. Some other stocks, for example, MTN. Although MTN price at 214 naira, is still far from what it was some few weeks ago. But if you look at the results, their results also show some promise. So agri sector, of course, Okomu Oil and Presco, have done quite well. Okomu results, first quarter of 2022, Okomo results, shows an improvement in earnings per share from I think about 5 naira per share to 9 naira per share for Okomo, and ditto for I haven't seen that of Presco, but of course, if you look at their share prices, 144, 147 for Okomo, 143 for Presco. Presco that was just under 100 naira, not a few days ago. So that tells you that some of these stocks are doing well. Cadbury too, yes, in the food and beverage sector. So some of these stocks, most of them, I would say, if you use their Q1, quarter one results to judge, you won't be surprised that they have been showing, doing quite strong in the stock market.
All right, Prof. Quite interesting performance from most of those stocks. But we're going to drill down on company earnings for the first quarter in 2022. Do stay with us right there. You're watching at home, and Professor, we'll come back to you just after this break. Do stay with us. This is Capital Market. Welcome back. You're still watching Capital Market live on Channels Television. Well, let's take a look at some first set of first quarter earnings results released to the Nigerian exchange this week. We had a United Bank for Africa release its earnings result for the first quarter of this year to the exchange. According to the report, the bank's profit grew by 8.76% year-on-year to 41.50 billion during the period. The report also shows that the bank's net interest income grew by 14.10% to 84.87 billion naira. Operating expenses rose by another 20.5% to 77.6 billion naira. At the same time, its earnings per share jumped by 9.62% to 1 naira 14 kobo from the 1 naira 4 kobo reported the same period last year. Another one is MTN. The telecom giant released its Q1 results, and this week revealing a profit of about 97 billion naira, reflects a whopping 31.28% increase compared to 74 million in the corresponding year of 2021. We also have other results from Nestle, Dangote Sugar. Let's bring in Professor Uche Waleke now to drill down on these impressive results. Professor, these results are quite good. About 70% of the biggest companies release their results for the first quarter, and they all are quite, most of them are stellar results we've seen, even though we've had, a couple of economic headwinds, facing them this year. How do you think these companies were able to, achieve these results?
I think it's consistent with the reports, GDP reports by the National Bureau of Statistics, which also talks about the sectors that are driving the economy. The financial services sector, has remained one sector that, has been in the positive territory, for many quarters. And so it's not surprising that financial services stocks, banking stocks in particular, have done well. You just mentioned UBA. You can also add Wema, Fidelity. They've all released their first quarter results, and quite impressive. Yes, telecom again, another sector that is powering the recent GDP growth we have seen. In 2021, you recall, according to the National Bureau of Statistics, the economy grew by 3.4%. That's the highest we've had since 2014. And the telecom sector has also been one of the, shining stars. So it's not surprising that MTN, posted, those kinds of numbers. Airtel Afri is another company that has done well, that is doing well. I'm sure when you also look at their numbers, it will, the investors would be impressed. And it's not surprising that Airtel Africa, has also, in terms of share price, has delivered so much appreciation to the investors of Airtel Afri. Airtel Afri was trading at under 1,000 not long ago, but today is in excess of 1,300 and 1,300, close to 1,400 naira per share. Okay, and that's next to Nestle, food and beverage. Nestle has also shown some resilience at over 1,400 naira. Of course, that's it remains the most expensive stock that we've had, that we have on the equities segment of our market. So I think by and large, just as you rightly said, the majority of the companies that have released their results have all, shown improvements in the first quarter results. Apart from pharmaceuticals, like Niemet, for example, where you'll find that revenue fell for Niemet. Revenue fell by as much as 25%, which affected, of course, their bottom line and the earnings per share. Another company that reported in a decline is Julius Berger. That's constructions sector. So, but apart from a few of them, as I said, a majority have reported very positive numbers. In the
Quite
insurance
interesting.
sector, linkage insurance, ICO insurance. If you look at their first quarter results, that's also showing some promise, and it's not surprising that it's also affecting their share prices. Of course, we know that
Right.
these companies are penny, even though they are penny stocks, but at least something is being added. And surprisingly, to companies like DAR Communication, if you also check the first quarter result, DAR Communication reported improvement in earnings per share, even though the price of DARCOM we know is just at 20 kobo per share. But that tells you that for these stocks, there is hope.
Okay.
Overall, there is these stocks are, if you like, undervalued at the moment. They have
Right.
good valuations.
But Prof,
and
I want to bring
this is the time to go into.
Right. I want to bring your attention to something. Some analysts, say the increase in profit is not necessarily as a result of increase in demand, but an elevated price of, goods and services that mask the devaluation of the local currency. What do you think?
You're talking about the impact of inflation on these financials. That will show more in operating expenses. For example, take that of NGX, the NGX group, for example. If you noticed the first quarter result of the NGX group, there was improvement in revenue, particularly transaction fees, from 1.4 billion to 1.7 billion. But in terms of operating expenses was very high for NGX group. Although much of that one can see in the in finance cost that was as high as 600 billion. So that usually shows up in the expense side. Remember too, if you are talking about inflation, it's something that is supposed to affect both sides, both the the revenue and the expense side. So somehow that cancels out. So I don't think I won't attribute the performance of these companies to just inflationary conditions. Even if you discount inflation, you would also see that these companies actually recorded some form of improvement, especially following the if you like, the gradual receding impact of negative impact of the COVID, that we had in 2020. So that shows that many companies are gradually coming out of the negative impacts of the COVID. Yes.
All right, Prof. Well, a stellar result indeed, but let's see how, other quarters go for the year 2022. Thank you so much, Professor Uche Waleke, Professor of Capital Market, Nasarawa State University. It was great having you, and enjoy the holidays.
Thank you very much. Happy holidays too.
Happy holidays. All right, now let's get an outlook for next week. It's going to be a shortened trading week. At the fixed income market, traders will expect demand for T-bills to improve in the coming week as the system liquidity becomes buoyant. They envisage a decline in average yields on T-bills and the bond segments. They expect an uptick in bond yields in the medium term as the FGN's borrowing plan for 2022 and the expected fiscal deficit points towards an elevated supply. In the coming week, inflows from FAC allocations and OMA maturities are expected to hit the system that will actually boost liquidity towards the end of the week and the result in the OVN rate trading southwards at the end of the week. Well, that's the week ahead right here from us. Thank you so much for watching, and we'll catch you again same time next weekend. Thank you so much for watching Capital Market. I'm Ladi Williams. Bye for now.